Gentlemen, let's talk about normalcy bias. Why most Americans have the Iran conflict wrong, how they're eventually going to pay the price through currency debasement, and how this is probably the beginning of a commodities supercycle. Now, getting right into it, here's a gentleman with a tweet that says, "The current situation went from my base case to the worst case scenario in the past 24 hours. I think you're going to start to see a lot of this from now over the next decade. People's expectations of what they thought America was are being revealed as incorrect. That is, America got itself into this quagmire by attacking Iran on behalf of Israel. This is going terribly. I think that people underestimated the ability of Iran to defend against both the USA and Israel at the same time. This does not even consider the idea that Russia and China could enter into the fray, and, we obviously see who wins there. So, Trump has tried to say that America is winning and going to pull the troops back, or he's trying to declare an early victory. And Iran seems to have come back and said, no, we're not. We're going to fight it out. Now, as a real quick laugh here, look at these. This is an American group of individuals who have come to stare at Donald Trump's orange face and cheer. They hold up their signs, say, bigger paychecks, obviously a desperate crowd. Nobody here is happy. Couple of neck beards. These people look like subpar individuals. This is not a strong crowd of a winning populace who represents the pinnacle of human existence. This is middle America, retard bumpkins, sad-faced, degenerates who want, they want the outcome without putting in the input. This gentleman holding bigger paychecks, these people are these the most skilled individuals in the world? Highly doubt it. But anyway, let's get into oil, because that is where we left off yesterday. We take a look at oil, and so yesterday we highlighted that the previous high at 77 ended up being support when oil broke through and went to 120, came back, touched back on that previous high, which was 77. And then we said that oil had broken out, and we were looking, a chart looked about like this, something like that. And I said that it would seem plausible that we touch back on this level here at about 89 and go higher from there. That would be a logical, scenario, seeing that it looked like the oil market was starting to turn around. This is why you see gentlemen like this saying, "Oh, the situation has gotten a lot worse. It's gone from my base case to my worst case." A lot of people are realizing that the conflict is not going that swimmingly, that Iran's not going to just back down, and that the situation is pretty much out of control. My question is, what is the U.S. going to pull back and declare victory? Can't do it. If they did, then they would violate the security agreement that underpins the petrodollar. What are they going to do? Put boots on the ground to exacerbate the issue further? It honestly looks like that might be the case, because what you need to understand, let me digress here real quick. What you need to understand is a lot of people are talking about how can we get a solution to the current conflict. I think that they're viewing this situation from the wrong perspective, and here's where the money is to be made. Understand that the vast majority, 80% of Americans oppose the war. And what do they get? They get war. So do they have representative democracy? No. But disregard your complaints. The war's happening anyway, regardless of whether you like it or not. And you have to realize that although 80% of people hate the war and they hate dying and all the suffering that it entails, there's a contingent of the population who is now sitting down at the dinner table to feast. They got exactly what they want. They've been strategizing and planning for this conflict for 20, 30 years. They just got exactly what they want. You think that they're going to just give up? They just achieved an objective. There are some people out there who just got exactly what they want, and they are thrilled to bits, all right? They see dollar signs, they see power, they see control, and they see this crisis serves a lot of purposes. Now, you see that JP Morgan, somebody quoted JP Morgan and said, JP Morgan basically stated that there needed to be boots on the ground as a means to reopen the Strait of Hormuz. Number one, that would be catastrophic for the United States because it would probably entail a draft. It would probably entail having to deploy the National Guard in the United States because most young men would oppose going to war on behalf of Israel. And therefore, you could conclude that there would be a domestic conflict in America that would ensue. Therefore, that begs the argument, if you pull the troops out, that you basically, the petrodollar agreement's done. If you put boots on the ground, then the US dollar hegemony appears to be done because you would have a civil war. So in all circumstances, I think what you're seeing now is you're seeing a timeline which is not just random. These are events that are structured. They want this timeline to occur. They don't care what your opinion is. They're going to war. You're getting a war. And they want the Strait of Hormuz to be closed. They can say, oh, we got to put boots on the ground. We got to open up the strait. They want the strait to be closed. What better argument than having perpetually higher oil prices than for the strait to be closed? They can get a food crisis. 30 to 50% of urea travels through the Strait of Hormuz. A lot of oil goes through there, so it's an oil choke point. A lot of commodities. So you'll get a boom in commodities prices. But also, what percentage of the boom is as a result of disrupting the supply chains? What percentage is as a result of just inflation? Who knows? But they can blame it all on the war. So the war is very useful to some aims. And considering that your opinion's a moot point anyway, you have to just do some analysis and just say, okay, who benefits? Why? What does this serve? They've been telling you for the past 10 years that they want you to own nothing and be happy. They basically want you to own nothing. And currency debasement is the way to preserve the fiat system. Therefore, it stands to reason that this serves a lot of aims of power. What better method to lock you down in a 15-minute city than to say, oh, don't have the petroleum. It's, Strait of Hormuz, war, sorry. Nothing we can do about it, It's like, this benefits some people. But anyway, I think that's the thing. Most Americans are going to have to come to terms with the fact that the people that claim to represent them do not. And I think that the notion of American US dollar hegemony is toast. And since the US dollar is now being revealed as the barbarous relic, this is an opportunity amongst the commodities complex. I think all commodities are going to be in a supercycle. You're going to see commodities go through the roof. Real assets are going to be the benefactor over the next decade. So let's take a look. Obviously, we've looked at gold down a little bit on the day. Overall, the gold has has plenty of room to pull back before you're going to get bearish on gold whatsoever. Let's also go back to CF Industries Holdings, which has skyrocketed about 14%. In trading today, plus after hours, you got about 14% appreciation on the day. Now, this gapped up. Who knows if this fills the gap, but a tremendous bid here. Even in after hours trading, you're up about another percent. So who knows what happens tomorrow. You got a bit of a flag pennant forming here. I think that with the closure of the Strait of Hormuz, I would not be surprised if this continues to just get bid up, but obviously not trading advice. This is just, the market doesn't know where this should be priced right now. This is just going probably parabolic for the time being. So interesting there. Let's take a look at a couple other commodities players. Here's Petrobras. So doing fairly well from a historical perspective. They are breaking above this range here, which they were stuck under for some number of years. So now that they've broken out above $18 a share, they're back into who knows what territory, but obviously probably going quite a bit higher. Let's take a look at Vista Energy. CEO was on Bloomberg today, breaking out to new all-time highs. So I think a lot of these commodities companies are going to just do fairly well. Now, Marathon Petroleum, all-time highs, all-time highs. And somebody in the comments mentioned Valero, which is also doing just the same. So any exposure to commodities, I think, is going to be relatively beneficial. Here's BHP Group. They are a diversified mining company. They operate in Australia, Europe, China, Japan, India, South Korea, and the rest of Asia, North America. They're everywhere. And they operate through copper, iron ore, and coal. Massive mining company. The only thing is they have very limited revenue growth, so not very constructive on that front. But I brought this up because they hit a recent high of about $59 a share. Now they're down to 50. This technical line seems relatively interesting. Not really saying that I would trade this. I don't like that they have limited revenue growth. So I think there's more interesting opportunities here, but this just caught my eye that you got this breakout here and now you're kind of floating around this level, although in after hours trading, you're probably lower. So I don't know. Interesting. What else? Riley Exploration Permian, small energy exploration company, but they have broken out now, at least from their recent range, up to $33. They're catching a bid. What else do we want to look at? Stanley Druckenmiller is just buying copper futures and rolling the front month contract. Obviously, copper has done tremendously well. And I think that's not if you can manage the risk of this volatility, it's easy to praise commodities, but you have to be able to withstand the drawdowns here. I mean, look at the violence of this move down here. But if you do this with a percentage of your portfolio, you get into futures and you roll these contracts, yes, you're going to have some volatility, but over the next decade, I bet there will be a lot of traders who get into futures markets and all they do is buy futures on various hard and soft commodities. They roll them forward and they're probably going to catch what will look like a lot of appreciation. Yes, they'll probably be trading and generating maybe a bit of alpha, but a lot of that will just be the inverse of inflation. So if this is the decade of currency debasement, which it seems like it will be, then one would argue this is also going to be the era of commodities. And, a massive opportunity is probably just to get exposure to commodities in some sort of fashion, whether it's the underlying producers or it is by rolling futures contracts, however you do it. Not investment advice, but I bet a lot of people that do will make a lot of money. Now, here's something important to highlight. There's a tweet that says, this is what real hyperinflation does to a stock market. Early in the move, stock market moves outweigh inflation. Later in the move, stock market gains are nowhere near the rate of inflation. Many will be fooled by Western stock markets going up hugely when the time comes. It is imperative to understand how things actually work. Then also add resulting depression plus central bank digital currencies, bail-ins, coming capital controls, bank closures, severe ownership issues, how long physical will be available, etc., and it quickly gets complicated. It is vital to piece the puzzle together in order to understand what is coming and in order to be prepared in detail in every way needed. Now, here is a chart with the Argentinian stock market, which demonstrates a nominal gain of 16,700% in 9 years. The point that he is making is ostensibly the inflation rate exceeds 16,700%. Therefore, the real yield, or your nominal return minus your inflation rate, the real yield is probably negative, or at least definitely not as good as this gain. This is also what Buffett highlighted in his 1977 article titled in Fortune magazine, titled How Inflation Swindles the Equity Investor, wherein he highlights that the return on equities is relatively fixed at 12% and inflation degrades real returns on capital. So I think that this is going to be a tremendous opportunity for commodities producers, and I will leave it there.